Perfect. I'm just gonna double check, make sure the stream's working okay, and I'm sure we'll have some people trickling in the meantime as well, which will be nice.
That's
Let's
good.
just
GM, GM, or good night. Good night, good
yeah.
night, GM, GM.
GM people, how's it going, everyone? We are here with the inaugural The DeFi Show. I don't know why I've called it The DeFi Show. Maybe we'll change that, but it's the first of maybe many in due time. Joined today by the one and only Dio from Nest. So pleasure to have you on the show today.
Yeah, very nice to be here. We know each other for some time, but I think this is our first live stream together. I'm very excited. A little bit maybe about myself before we dive into DeFi. I'm Amadeo from the Netherlands, background computer science, economics, crypto for a very long time, and a big fan of decentralized autonomous organizations and decentralized finance. And before we dive into everything, I think it's very cool also to highlight how this show came about. I'm a big watcher of Leviathan News, and when I saw Garrett posting an interview with the one and only, I was like, yeah, let's do it. And I bid on the Llama auction where I won the interview. So it's like, it kind of rolls right into DeFi. We can do decentralized bids and work with each other in new ways on chain. And that's what we're doing right now. So it's fantastic.
Yeah, I mean, I don't normally do interviews. I don't think I've ever done an interview, actually. Normally, I'm the person getting interviewed instead. I think, I met Garrett and I was like, you know what? He proposed this opportunity. I was like, you know what? Okay, go on and let's try it and see how it goes. So this is the first auction that kind of has produced some sort of content or something out of it. So yeah, let's see how it goes. But pleasure to have you. And Dio, I've seen you on the Leviathan show many times. I think a couple of times we might have been on together as well.
Yes.
And we always seem to bump into each other at some of the conference circuits as well that we do. So yeah, nice to properly have a chat with you and really go into DeFi today. Talking about where you think where DeFi is today, some of the things that excite you in DeFi, and of course what you're building in DeFi as well. Because we're as much as we're here to enjoy DeFi, both of us are DeFi builders as well, and so we kind of get to experience both sides, as a builder, but also for users as well. Because I think both of us are probably power users of DeFi. I think that's fair to say, right?
Yeah, correct. I love DeFi, and it's I would say I've been before being a founder like you or a builder, I was more on the research and on the fund side and on the DAO side. So I loved doing research for Llama Risk, loved participating in DAOs like Curve or MakerDAO, always kind of a little bit in the background. It's kind of how our industry got started. We were a bunch of nerds and engineers that the smartest people can kind of or people that want to express that intellectual side of themselves can just express that on chain and do things instead of having I think a very important thing that DeFi doesn't only remove the barrier between peer-to-peer finance, etc. It also removes the barrier between the builder and the idea. If I want to build some financial innovation and traditional finance, you have a really hard time. And in DeFi we can just experiment, learn, do things. So yeah, that really attracted me to the space.
When did you properly get started with DeFi? Was it at the very beginning with the likes of Aave and Compound, or was it a little bit after that when perhaps Curve and some of those guys came about?
Yeah, I got in DeFi. So when I worked with Cyber Capital in the Netherlands, it was the first Dutch hedge fund, and this was in 2015 where we started with $500,000, a small little fund where I was just kind of like the technical researcher, analyst. This is a nerd that loved DeFi. It was a very small, grassroots kind of thingy. And we built that fund up all the way back to in 2017, when I kind of in my research journey, because I was researching a lot of protocols back in the day. Our strategy was already a fundamental analysis fund in 2015, 16, basically. So that was a very interesting time. And basically what we did was we kind of searched all the GitHub repos from all the different protocols.
Yeah.
And then we would see who was actually building new code. And then we would just invest in it. And that actually worked very well. And that's also how I got to know MakerDAO and Aave and components. So we were quite early into that, and I was also quite an early user of MakerDAO with their old crappy interface. And then now, first the CDP models, and then the lending and borrowing markets. Well, it was basically first Uniswap, then MakerDAO, Aave. It's kind of like the core components, and that kind of snowballed into where we are today.
What's been like your singular most favorite moment, like over the years? I think DeFi's evolved quite a lot, but what was like, was it ever like a time period where you were like, wow, this is like the most fun I've ever had, or the most enjoyable moment, or the most memorable moment, like in over those years?
There's been a lot of ups and downs in DeFi always, right?
Yeah, and I'm sure there will be to come as well.
It's been quite a dynamic journey. I think my favorite time, was still the crypto canal in Amsterdam. This was the top of the 2017 bull market. I was kind of still, I had my first kind of corporate job, and then I stopped there and I went into DeFi, and it was all new to me. And I think that was my favorite time, just learning and exploring and feeling on top of the world on the Herengracht in Amsterdam, which is kind of this in Amsterdam. If you guys been there, you have these canals, right? Yeah. And it was one of the most prestigious canal where normally only these financial things are sitting.
I see.
In all buildings though. And then there was a lot of crypto companies popping up, including the company that I was working with at the time. And that was a great time, like doing beers, and we had investor meetings in an old hall, introducing people to crypto. That was, I think, the most fun time.
Yeah. No. So I wasn't in crypto that early. I was in crypto more from last cycle. So my first experience was, with the likes of Uniswap and co, kind of coming to market. But for me as well, it's like those very early memories when everything was still very, very new, and you had all of these brand new concepts that you just never ever kind of explored or experienced before, especially with my medical background as well. I don't have a finance background, so it's very, very different. Those were like my really, really fun memories as like coming into the DeFi space as well. So I kind of relate to those early memories a little bit as well, when you first kind of get entrenched in DeFi.
Yeah, exactly. For me, it was like basically learning a lot about cryptography, learning a lot about public key, private keys. How does this work? How does it make sense? CYXK, like how does the curve work? Like Uniswap works, and then that's also how I got deeper into curve finance.
Yeah,
that's Michael, and it's like he basically built this huge innovation that I think is still pretty underexplored with the bonding curves and how we can stack different duration risk, right? That I think that there's a lot of things to explore there still. I got into that, and I think what's changed a lot in DeFi. Back in the day, I remember also when you got in, it's like we would invest in projects, and then projects would kind of pretend to do actually something real, but then some of them were scammy or not real. Okay, that happens, right? I believe in this cycle, we have too many meme coins. I think now you get rocked by a meme coin, you don't learn anything. If you get rocked by some sort of a new kind of AMM model, you're like, oh, that didn't work out. Why didn't it work out? And you can learn something. So I do hope we go back a little bit more into the technical side or like innovation side, because I think there's so much to do.
I guess even with meme coins, though, I'd argue that there still is innovation, perhaps with bonding curves or AMMs, etc., but maybe less so with the actual instruments that we're using on them.
Yeah, I guess so, right? But it's all the problem I have with a lot of these instruments. It's kind of like masking a lot of complexity and making it very difficult for the new entrants, kind of rocking the new users without them realizing they're being rocked, and then pushing that to the top of the funnel, right? That's also how traditional finance works, in my opinion, of like having a small, cabal that basically controls most of the financial streams, and having all us peasants work for fiat, which is basically worth nothing.
Yeah. Fair enough. I hear you. You mentioned like you really were interested with Uniswap's curve, and then of course curve finance and what Michael innovated. perhaps with stable swaps as well. And again, all of this coming down to like AMM design. Is like AMM's like your favorite kind of subsector of DeFi, or is it more of the kind of staking and restaking stuff as well? Because I know that's also your cup of tea.
Exactly.
Or
right.
maybe something else. Maybe there's another other parts of DeFi that you find really, really interesting.
Yes. And this actually is something I realized. Yeah, I was always interested indeed in the main thing that interested me, also with the background in finance, because before I worked in banking, I was interested in getting price discovery on chain, right? So how can we make it so that we can actually get rid of centralized exchanges and do full on-chain price discovery? This is a very interesting topic and still so much to do, because right now also for YieldNest, right, we're having our TTE coming up. In order for us to get the attention and have the optimal price discovery, you will very quickly move a little bit more to centralized exchanges still, because the perps and everything still more efficient on centralized exchanges, and things like hyperliquid are coming in, but there's still a lot of work to be done there, I think. That's kind of like my first interest. But what I realized recently, I think in order to really solve that problem, we need to get more liquidity and more settlement of certain asset classes on chain. So that's kind of like my newer interest, where before I was very interested in price discovery on chain, removing toxic order flow, eliminating impermanent loss, and building a protocol that makes it easier for users. And as we know, 95% of most liquidity providers on chain lose money, right? And if you remove incentives, and that's a big problem. And I think actually Michael has a really good innovation on that with Y basis.
Yield basis.
Yeah. Yield basis, yes. That's a step in the right direction. And I do hope to see more innovation there. But my that is kind of like my past huge interest. And the new interest that I'm really excited about is actually using DeFi what it's best used for, right? And we see now again an RWA spike. But as you know, you've been in crypto for a long time. It's the 5th time that we're getting excited about RWAs, basically, right?
Yeah.
The same like with DeFi. It's like, well.
Yeah, I think I'm also with you in that. This is also like a pretty more recent interest of mine as well. Bringing more kind of traditional instruments, but also kind of exotic instruments as well on chain, and using DeFi's composability. The thing that DeFi is so good for, being able to tokenize this asset, whether it's let's say an Apple share, or maybe it's an insurance, or maybe it's some other commodity of some sort, and being able to like get a loan against it on Aave or on Euler or some other place, and maybe using it as collateral for me to trade some perpetual contract or some option contract or something like this. I think this is like some of the things that I'm really, really excited for. I think one of the interesting things is like a lot of the DeFi innovations have so far been on EVM chains. Ethereum really being one of the places where Uniswap, Curve, Aave, MakerDAO, etc., all originate from. But we're now seeing like innovations on other chains as well, like Solana, for example, as well, which historically wouldn't necessarily say has been a big hub for DeFi, but I think has been changing as well. What's your like feelings of like how DeFi is today and like where DeFi will be tomorrow in this kind of multi-chain future as well?
Ooh, yeah, that's a very interesting question, right? So, I think it's not necessarily about speed, but I think it's about settlement, assurances, and time to finality. I think that's the most important components. As you know very well. But it's a hard question that I actually do not have an ultimate answer to. Like I think nobody has. My personal feeling is that I do think the EVM is kind of coming back, in the sense that again, like the time to finality and settlement assurance is very important. I would say if Solana figures out like Fire Dancer, it actually starts to look very much like kind of the Eve roadmap that went then a little bit on its head, right? Where Eve is like, okay, we built this layer 1 and then we will layer 2s. Solana built this really fast layer 1 and it's now building this kind of layer 0 thing via Dancer. I'm not an expert on Solana. I never developed there, but I do think, yeah, it's becoming a very serious contender to the EVM chain and to the settlement assurance there, if you can actually settle it on this layer 0 component. Although I would say that it's I think in the future, and this is a little bit too academic, and I think it's also the problem why Eve had a bit too much downturn, because like these academic problems are really hard to explain or to understand. But like what it comes down to, everything will basically be a proof chain. So I think that, and that's this ZK proof. So I think that we will have certain with financial settlement layers. So there will be this core financial layer that will settle all these big balances. That will probably, I think, be on a layer 1. And then around that, you get like different branches that prove into that layer 1. Yeah, and which layer 1 that will be, I don't know, actually. I'm a little bit confused myself about it. I don't think, I think if Bitcoin is doing this opcode upgrade that they're talking about and removing that cap, then also Bitcoin becomes back to the mix. Solana is in the mix, Eve is in the mix. And I think it's a big question of like, yeah, what offers these highest settlement guarantees? And at the end of the day, value will flow into where it's most free and where it can settle the most hardness, right? So yeah, I don't know. I think it's still kind of the future is still going to be like on Eve layer. I think Eve layer 1 is going to be this financial hub where you have like settlement assurances that sync to the layer 1, and they will export their proofs into other applications that can then execute on other financial operations, right? So that's where I think it's going. But that might take some time before we fully figure that out. And I think the problem that we had in the past with Eve is that we thought we figured it out, but we didn't. We still need to solve a couple of problems, but I feel it's moving in the right direction. We're all racing. I think all these chains are racing, like Sui, Solana, Bitcoin, Eve. All these things are kind of racing for that, right? Like they want to all be that settlement layer. So it's going to be interesting what happens. Like can there be multiple settlement layers or one? I actually think there can only be a couple.
Well, generally, that's how value accrues, right? You normally, in every single sector, or no matter what you're talking about, there's usually just a few dominant winners, and everything else consolidates. I mean,
yeah.
look at like, let's say, off the top of my head, like the mobile industry, right? There's like a couple of players, even though back in the day you had the likes of Nokia and BlackBerry. Where are those guys today? If you don't innovate and keep kind of pushing the boundaries, new players will come in and they will just dominate, just kind of like what Apple has ended up doing, or maybe with Samsung, etc.
Yeah, and the big question is, did Eve lose that battle, or is Eve losing that battle, or is it actually winning? I think it's a really hard question, because in some domains you would say it's winning, but in some domains it's losing, right? Like a lot of users are going to other chains, but at the same time, on the technical side, it's actually producing a lot of really cool things.
Yeah.
But does that get recognized? Yeah, at same as Linux, you had Microsoft and Linux. Linux is a much better operating system than Microsoft. It's not in the sense of the usability of Microsoft is better. Yeah, Linux is much cleaner, much more stable in many ways. But it's
So is that what ETH is, and is Solana going to be Microsoft?
Well, I don't know. It seems we both have some sort of bias. Like I don't know. Like I do hold a little bit of both, but more heavy weighted towards Eve. And I think you're more heavy weighted towards Solana. And I think at the end of the day,
actually, I think I'm more heavy towards ETH. Actually. I think
okay. Yeah, I thought so. I thought so as well. Yeah.
I'm just being contrarian, like.
I love it. I love it. Yes. Yeah. Let's be contrarian. Like so, I'm personally also more heavy to Eve, but that's a great question, right? Like, I don't have the exact answer for that, but I do think Eve is going to win. Like when I look at like everything that's happening right now, all the layer 2, the interoperability is actually great. Like I'm a lot of times surprised. Like if you now use ETH, and I know MetaMask can be buggy or Rabbit Wallet, but you can see the matching of transactions, the batching of transactions after Pectra, so much more easier, right? Remember, we had to like click every little transaction, but now they just batch that stuff. It's just really convenient.
Yeah, I think Pectra is actually going to change and really like compress that difference that we saw with the Solana UX to ETH UX. And I'm really looking forward to seeing like what the wallet providers like end up integrating. I can't wait for things like sponsored transactions. You don't even have to worry about gas fees or anything like that. I can just go to Yield Nest. Don't even have to have any gas in my wallet. I've just got stable coins, and I'm good to go. And I think things like that really drastically changed the whole UX for users, not even having to approve, just one click, things like that, I think are really, really nice. And all of the security elements as well that come with something like the Pectra upgrade, I think I'm really, really looking forward to.
EVE is an engineering masterpiece, in my opinion. If you look at the how clean it is, there's way more. Yeah, I still think Solana is way behind on a lot of these technical frontiers. And EVE is boosting forward very quickly, but Solana is in the back mirror basically, and that's good. I think that's only a positive thing. Like if there was only EVE like we had in the past, we would have never gotten that gas increase. It was a bit ridiculous that we didn't do that earlier, actually. So.
Yeah. Cool. Yep. No, it makes sense. So, look, we've got quite a few hundred people who are tuning in right now. So I thought maybe let's move the conversation on to building DeFi, especially with YieldNest as well. Maybe for those of you who don't know what YieldNest is, in like one sentence, how would you explain YieldNest?
Yes. So I would say YieldNest is a DeFi structure product platform, right? So this is basically the next generation of DeFi protocols where we offer a simple risk-adjusted return for our end users. Right?
So why should someone use YieldNest as well?
Yeah. So if you are a crypto native, you have crypto assets, ETH, BNB, USD, or BTC. These are 4 derivatives. There's more behind that. I will come back to that later. But these are the 4 derivatives YieldNest offers right now. We want to offer high risk adjusted returns. So if you are a user, and like like all of us, we have maybe some experimental bags, we have some holder bags, and for example, personally, I do have something that I put in deep cold storage or something that I put in, lesser storage, and like it's hard to manage these assets and make them productive. So if you're looking for productive assets that you can hold for longer durations of time without the need to do certain actions, then YieldNest builds derivatives. So if you're looking for high risk adjusted return on your base derivatives, that's what YieldNest offers. And then on top of that, you can also take that and go into DeFi and lever up the risk curve if you wish to do so. This will require maybe a bit more management if you want to go into a liquidity pool or you want to go into a lending market and loop that, other things. YieldNest actually makes sure that the base yield is higher than, for example, in ETH, you can stake it in Lido, but you can also stake it in YieldNest, where we actually stack different components and different strategies on top of each other to give the highest risk adjusted return. So we don't want to do like a 200, 300% yield, but we will offer that to users that wish to explore those higher yield curves with the higher risk that is involved. Or if you want to have low risk adjusted returns, high risk adjusted returns, you can go to YieldNest and use our derivative stack, right? But that being said, we kind of want to showcase our superpowers with what we built with our technology stack, right? So let me, if it's allowed, I can like share my screen a little bit.
Absolutely. Yeah, please do. If you share your screen, I should be able to put it on the screen for everyone.
Fantastic. Yeah, I think I'm just going to do a deep dive in like what is the innovation that YieldNest built, because that also goes back to share my screen. 1 second. Here we go. So what YieldNest tried to do is like we tried to kind of innovate with our max LRTs, but I'm just going to go back to the homepage. So simple, secure, supercharged yields, right?
Yep.
Very simple. We currently have over $500 million in TVL. And if we can go, for example, for, you can see here, derivatives that we can offer, these 4, and then there's more to come. We also have an RWA strategy coming and other strategies coming. And basically, there's a whole how we got started story. That's why we call it LRTs. And in my opinion, restaking or liquid restaking is all just about capital efficiency, right? Like, oh, I can stake somewhere and I can underwrite this risk or that risk. We kind of took that to the next level and say, all right, you get a nice around 7% return on your kind of ETH, your hard ETH assets. And then you can go here and you can see what kind of strategies are we using. So there's a lending buffer right here. You can see the weight into it. There's inflow. So we got some inflow today that we need to allocate, or just going to be allocated. And then there's underlying like different strategies, right? And what's really cool, and what is the challenge with a lot of these things, when you go to a lot of other vaults, I mean, Yearn is a really good example to us. Also, Wavy and Yearn are advisors to YieldNaz, and we work very closely together. We're actually stacking different yield strategies also from Yearn into our strategies. So it's a very collaborative thing. As you can see, if you go to YNEFX, you can actually on one asset see all the balances, right? So instead of like a lot of these DeFi strategies, they don't sync all the assets back. So, I not want to call out or be negative about any other products, but there's certain products with vaults that where you go there, oh yeah, you get 20% yield, and you click and you cannot really see what's actually happening to my assets, right? That's not really DeFi, because what unfortunately happened to DeFi, where we had these hard settlement guarantees and hardcore different technologies that we're working very hard for, and then a lot of the DeFi stuff currently is going off chain, and it's very dangerous. It's basically different, as right? It's like Celsius in disguise. So it's very dangerous for, I think, our ecosystem, right? And what YieldNaz is doing, I will just go a little bit technical here, but you can see that I think this illustration illustrates very well. You have a user, there's a vault, we call it max LRTs, and they stack different strategies, and all these strategies sync their accounting back to one endpoint and settle it all on ETH layer 1, or in the case of YNBNBX on BNB layer 1. And we're also working on a Bitcoin derivative that actually settles its accounting to Bitcoin layer 1, so Bitcoin Core, right? And that matters because of that kind of setup, you can see exactly what the vault holds. You can see how the accounting works. And with that in mind, we can actually do multi-chain strategies as well, or stack different duration risks, right? And I hope that's clear so far.
Yeah, super clear. Yeah.
Nice. And what I'm really proud of, and also you can see that on our GitHub, all our work is open source. And we got over 26 forks and stars. So people are picking up our code, because we built new codes. We did adjust the 4626 volts, and then we made some adapters to it, and we made it very lightweight, so you can actually accept multiple assets and then connect multiple strategies to that. And how we do that? Well, there's a governance stack with a time lock, and when we do our TGE, we work with Aragon V2, where we are going to release our governance stack, and then slowly but surely these kind of rule engines will be guided over to our governance stack. And then what you get is that each product will kind of be its own kind of sub-DAO that will be created, and governors can be selected, and then you can kind of like, I call it the apex of yield optimization, because you can get governors per strategy that can then also backed up by AI data providers. The AI is not making any financial decisions, but they can then actually adjust these vaults and add new strategies and all account back into one settlement layer, right?
That's very cool.
Yeah, and the only reason that this is possible, and we still have a lot of work to do, right? This is not done. This is like a moving innovation, and that's why we also work fully open source. So anybody that has ideas and wants to work with us can go to a governance forum or contribute. I want to bring that back to our industry, right? Remember, like, this is very important, I think. And the main innovation why we can do that is co-processors. It's a fancy word for basically how can we sync data from a strategy into one other vault, right? Without having the issue that somebody manipulates that other oracle, right? The coprocessors are not fully integrated yet. We're looking into Bravis, space and time, and other coprocessors. Still a lot of work to be done to make that fully 100% mature, but generally it's already working, and we're like kind of the first but one of the earlier ones that's deploying that right now.
Do these coprocessors use TEEs or ZK, or what are you looking to use any specific type of coprocessor?
Yeah, so basically that's why we work with partners for that, right? So I'm
Okay,
not a coprocessor like expert. We're not
Yep.
building our own coprocessors, but
Yep.
it's mostly ZK. Yeah, and then you prove the data off chain.
Yep.
You can
Yep.
sync it. It's actually huge innovation, right? Like, and I have my deck open here. This was me in Amsterdam, by the way, in the fund. But we also have a RWA strategy we're building. And what is really cool about this, and you can actually see that already in YNEFX, what we do here, we actually stack duration risk and the Euler vault. This is a vault from Euler. And the buffer, it has because 4626 vault always need to have instant redemptions, right?
Yep.
And what we do here, we offer instant redemptions, but there is a buffer. So that means that there's now 23%. So if everybody comes back, then the AMM hits in, and we're also going to add like dynamic withdrawal fees there and queuing systems that are coming
nice.
there as well. But because we inject money into this buffer vault, you create instant like utility for your asset, right? So now it has over 35 million, and it has quite a nice chunk in these different. Euler has around 6.7 million. So because the buffer is in that vault, it creates instant like utility for people to loop if they want to, right? So it's a new game theory around that, and we can stack these different duration risks, and that's what we said at the beginning as well, like instant settlement guarantees, time to finality, and stacking of duration risk. And then if you take that to one thing that I'm really bullish about, is tokenizing private credit on chain. You can actually bring a whole new industry, which is private credit is like a huge multi-trillion-dollar industry. On chain. Yeah.
Very, very cool. It'd be cool to learn about some of the different strategies as well. So you have this main vault for ETH, where you can earn 6 to 7% at the moment. You have one for BNB as well.
Yeah.
Out of interest, what made you pick BNB of all of the assets that we have? Why BNB?
Yeah, it's a top asset, right? So we can basically build this for any asset.
Yeah.
And we were just like, okay, we start with ETH, BTC, USD, and we also pick BNB because right now, how do I say this in a good way? It's basically the chain that that has a lot of users, right? And it's something that is our industry that we do need to change. And I don't know how yet, but I think together we can change that. Because if you look at the ETH users or other users, it's getting lower and lower. It's bad, right? But on BNB chain, and especially if we can connect that into, for example, a Web3 Binance wallet or things, way more users, right? If you compare that to the on-chain users, which is basically, if you say there's 1,000 off-chain users, then there's only 10 on-chain users, right?
Yeah.
So it's mostly from a commercial sense that we picked BNB.
It makes sense. There's a lot of BNB as an asset has a huge valuation, and therefore there's a huge amount of TVL to capture. And I think if you can, as a company, make fees from some of the management fee or your performance fee, whatever you have, it makes complete sense to offer this asset. And that APR is pretty actually insane that you're offering.
Yes, and how do we do that? Let's dive in. So you can we're working to kind of update the names here, so it's a bit cryptic still. So please forgive me for that. But it's I say in DeFi we always have to balance our autism with with some more creativity here, right?
Yeah.
But we're going to change these names. But basically, what it means is that you have a buffer here. This will basically be another Euler vault, right? That's going to be upgraded soon. And here, this basically Sliss BNB thing. Basically, what it does, it delegates to our institutional Binance account. So there's a little bit of a centralization factor there. But in that way, we can tokenize the launch pool rewards. So if you actually have a Web3 wallet on Binance, you can take your BNB, you stake it, and then, as you know, all these launch pools and all these things, we capture that and we bring that on chain.
Well, this is really, really interesting because like the first thing that came in my head is, now that you've tokenized basically the Binance launch pool, you can essentially do a basis trade with something like this and have an incredible stablecoin strategy. Running
No, exactly. And that's what's next, right? For basically, maybe that's also really cool to dive into. I hope Jonas is very clear so far. But on our roadmap, we so basically now for TGE coming up, and then we also have like AI agents in the background that we're exploring. I'm really excited about it, but there's still a lot of work to do, and we call it like hybrid governance, right? Similar to what MakerDAO is trying to do with Sky, to be like, all right, we have these sub-DAOs that get data feeds, right? Because the ChatV4 brings out AI agents that are $20,000 per month, right? Imagine what we will be able to do in DeFi. So if you have certain information banks that are that valuable, right? So we're working on that. Then we expand our multi-chain strategy, and then we're now going to release RWA strategy, BTC strategy, and the USD strategy. And then basically, liquid lockers are also coming out with StakeDAO. And then we will start a stablecoin development. So we have a stablecoin that you can borrow the derivative, you can borrow the stablecoin against those derivatives, and also in Wine USDX. I see a lot of opportunities there as well. So that's already in a roadmap by now. Yeah.
Very, very cool. One thing I wanted to ask you about was Bitcoin. Bitcoin being this apex asset that we have, it's been the best performer of the cycle. It's kind of decoupling away from kind of the rest of crypto assets as well. How are you earning yield with your Bitcoin, and what are the different strategies that people can kind of utilize to get exposure to a yield-bearing Bitcoin?
Funny enough, I'm always kind of honest and transparent. Like I love Bitcoin. I hold Bitcoin. It's basically still an NFT in my opinion, because like I was a big blocker, right? I was a big blocker. I was in 2016, 17 a Bitcoin bull. And then like what happened? I onboarded a lot of restaurants and things like accept Bitcoin, stop fiat. It's that kind of guy. And then the gas fee, the block size debate. And now that kind of comes back, right? And you see there's a potential fork coming in Bitcoin again, although I don't think it's that high of a chance as before with Bitcoin Cash and Bitcoin. So I think I'm a big fan of Bitcoin, and I think it's great. But in order to really earn fees on Bitcoin, we do need to have new opcodes in order to store more data on Bitcoin. And I think that's coming soon, so that I'm bullish. Right now, I think a lot of the BTC products are basically what we see in any of these EVM chains, trying to copy that. It's really hard to copy a DeFi ecosystem on your chain. But we do have different Bitcoin strategies, but it's quite challenging to find high returns for these Bitcoin strategies. So right now, and that's why they're also in LRT strategies, these components, they use our technology stack in order to go into kernel and then go to Hemi. And Hemi is another Bitcoin layer 2 that actually combines ETH nodes and Bitcoin nodes in one consensus algorithm. And I'm quite bullish there to explore. So I think in generally with Bitcoin and BTC-Fi, I think we're still quite early.
You have a huge amount of TVL in these strategies.
Yes, because Bitcoin TVL is a lot. If you can even give 0.01 return, you'll get a lot of Bitcoin, right? So that's pumping the TVL metric. But at the end of the day, I think TVL it's a nice metric. It shows strength of the protocol, and it shows that, okay, you have this much TVL, you didn't get hacked, right? This is of course a big honeypot for users or hackers. Knock on wood, but we have high security, so that's good. But these Bitcoin strategies, we bridge them to Hemi, and we're working right now on YNBTC X. So very similar to what we did with YNEVX and YNBNBX, and YNBTCX is basically work in progress at the moment. where we're kind of exploring like, okay, how can we actually hash the accounting of this Bitcoin strategy on where are we going to settle that, right? Bitcoin layer 1, yes, we can do that. We're exploring that with Hemi now, so that's cool. But how is that then generating yield? Well, the only way that it's generating yield is if you have some sort of volatility, right? So now we need to create high volatile pairs on chain, and I actually quite bullish on that. Where that goes back to the first topic of like getting prices carefully on chain. So if we create more volume in Bitcoin on chain with ETH, then I do think we will see more new ways to use Bitcoin, right? But a lot of things right now with Bitcoin yield is all off chain. A lot of people, the best kind of yielding Bitcoin strategies that I've seen that I used myself, that I got burned on myself because I lost some of my Bitcoin on FTX. I hope I get it back soon.
Yeah.
But it's trading strategies, right? Like with kind of like max drawdown strategies or something, because Bitcoin still has, even compared to ETH, way more volume, right? And because of that, you can actually build better trading strategies on Bitcoin. But it's on ETH we have more sustainable strategy, I would say, for now. But that could change. Yeah.
Well, I guess that's just because ETH is I guess a proof of stake asset, and I guess maybe to some extent we're now seeing like Bitcoin being used in proof of stake on some of these other chains, but perhaps maybe those other chains haven't become big enough yet that yield becomes anything tangible or scalable yet. I guess my question to you is there not a big enough market for Bitcoin lending or Bitcoin borrowing to like take like significant yield from that and use that in a variety of different strategies as well?
Yeah, that's what we're now exploring with the Bitcoin strategy, to see like, all right, can we tokenize some sort of a lending position, or work with Michael's new protocol, see if we can maybe wrap that into a more simple to use wrapper that automatically balances between the token or
Nice.
the Bitcoin yields.
Yeah.
And that's how we design our stack as well. Like, yeah, we want to move fast, but also slow. think fast and think slow. So we're seeing that, we're also absorbing that. And when that comes fully out, then we will probably wrap around that and then integrate some of our derivatives that we have on our chain, or explore with them. Because the Bitcoin derivatives that we have on chain are basically from big groups of Chinese miners or Chinese like community that doesn't for some reason like the Rep BTC and wants to have their own derivative, and they come to us to build strategies with us, right? And that's great. I'm very happy for that. Similar to the RWA thing, we also have like $600 million of collateral that's coming on after TGE with what we're exploring there.
Wow.
So there's a lot of money on the sidelines. There's no shortage of TVL, but there's a shortage of real yields, right? And I think we need to, that's what I want to work on.
Okay, interesting. So, with all of this TVL, how does Yield Nest right now monetize from this? Like, what's the revenue source coming to the company from all of this?
Yes, great question. So we have our token release coming out, our governance. Basically, maybe we should start here, the Yield Nest DAO, together with Aragon V2.
Yeah.
And basically have a 2-token model, YND and VYND. YND is a token for speculation. It's going to list on all the exchanges and all, etc. And then if you want to participate in the protocol, you stake your VYND. And this looks like this. I hope it's not too complex, but I think people here, the audience here, understand that, right? So it's quite simple. Yep. You have a user, uses an asset, generates yield, and then part of the yield gets distributed and buys back YND and distributes that to the users. Simple as that. And then we have a gate system that then lets people vote, or protocols that, for example, say like, oh, I want you to integrate my protocol or my protocol. Then people can vote on certain strategies, and that's kind of how we set this up right now.
How are you deciding like the dynamic fee as well? Like, which vaults have higher fees, which ones have lower fees, and can you share anything on the fee structure?
Yes,
as well?
100%. Like, for now we are like on YNEFX. Basically, there's no fee at the moment, right? But at some point, once after TGE, we will activate the fee switches there. So now we choose for growth, and then after TGE, we're gonna choose revenue. And then we're going to integrate, increase these fees. The only product, right now that actually generates a direct fee is kind of like our first product, native restaking, YNETH. We kind of build our own liquid staking the derivative here that you can see. And here we're taking a 10%
reward fee.
Yeah. And you can see here how we do that. You can actually see the nodes. We went too deep into this one. That's also gave us the insight to make it a bit more malleable. Here we prove all the validators. So all the validators are proven in this asset. So you can have provable liquidity and restaking, with all the different services here.
This transparency is one of the best things I've seen in DeFi. I really like this. I think you've done a great job with this dashboard. How users can really see everything, like not even just the underlying wallets that have the vault strategy, but also the operators, the validators, the companies and protocols you're working with, the risk assessment. I think I guess part of that comes from your background as well, right? Working with risk teams as well quite frequently.
Yeah, I love to always Coin Slayer, or like I was the one together with Fiddy that we wrote a report on Luna a long time ago.
Yeah.
This is like always really cool. And I think this is also how DeFi should be, right? Like you can see actually that we have this simplified page. That's kind of like when new users come in, this is also being updated before TGE. We're in a full execution mode here. But you can see here, like, there's this 2 asset. Simple, right? But then you can see if you start to click, there's a whole things that will open up, right? So here you can go with any asset into this asset. So you don't have to go to CowSwap to swap first. You can do that for you. And then if you wish to do so, you can just go very deep. Let's go to the advanced page. Let's dive a bit deeper. Let's look at the info. And I think that's what we need to do.
No, very cool. Going back to the tokenomics as well, I noticed you have a buyback and distribute. What was the logic behind that? There's so many different token models nowadays. You have some that are buyback and burn, some that are just buybacks. You're doing buyback and distribute. Some companies don't do any buybacks and they optimize for their own personal revenue and growth first before doing any sort of dividend payment. So I'm interested to know like what the thought process for you at Yield Nest was on that.
Yeah, that's quite a journey, and also especially since I analyzed a lot of these models in the past, what I realized the best model is a modular model, right?
Okay.
So it's always going to be buyback or generate and distribute, right? But the component here with YND can be replaced. So we could at some point say, all right, instead of YND yields, I just want my yields in ETH or in stablecoin, whatever, right? So we're going to build in that option that users can pick themselves. But for now, it's buying back YND in dispute. And we kind of do that for the simple reason to create more volume and volatility for a token. It's as simple as that. And I think it's probably maybe not the best long-term strategy, because it's maybe better to build in I do like what Curve does, right, with their own stable coin distributing that. So I think that's where we're gonna kind of trend towards. But until that time, I think buying back our own token, so creating a little bit buy pressure for the token, and then distributed users that might sell it, which is fine, because that creates that kind of like volatility in the token. And that kind of was my reasoning, where it's like, okay, what can I do here best? I don't know. There's not really a playbook, right? There's not really a best way to do it.
I mean, one thing I was just thinking is, MakerDAO, right? They a little while ago they had like a buyback and LP model, and then they recently changed it to buyback and burn. So I guess but I guess you having that modular approach means that you can kind of change things around. Or maybe I'd love to hear kind of what you think about what Maker do as well.
Yeah, I think buyback and burn is a bit weird, to be honest, because you're burning supply. What does that do? That just it doesn't really do anything. Well, and I mean, for layer 1 assets, it makes sense, right?
Yeah.
For a more speculative asset, I think not. I think MakerDAO should have better just done I do understand why they moved away from buyback and LP or something like that, because if you actually generate, if your token starts to trade on chain, you actually do not want constant bid on the LP, right? You want to have that a little bit flexible at certain times in the market. It's maybe good that there's not a constant bid, that the price goes a bit to the knees, right? If there's a downturn. And if you do buyback and LP, you kind of constantly buy, right? Which is not always good. So I think buying back and distributors is you buy it back, you distribute it. Yeah, and maybe there's a dump in the market, but because the fees that will be generated, and we expect, obviously this is not exact science, but we expect around $22 million annually. Like if all our fee switches kind of kick in, it's more like a simplified model of it. But I think that volatility that the token could create is a very positive flywheel. But yeah, let's see. I don't know. I don't have that much references of testing of like, okay, let's see what best. But this is a lot of intuition and feeling that guides me here to do that.
No, makes sense. And anything else for the users to know about when this is going to happen, when it's going to go live, how they participate, what they can do to get involved right now? Is it too late? What should they do?
Yeah, so basically we have our it's kind of cool. You can see we make it kind of financial, but then if you go to the seeds, we have here like a whole guide to that. I was notoriously against the points in the beginning, but I kind of got forced into it by the market, I guess. But it is kind of handy, right? Because we did a seeds program to, and you can see here, this is just a random wallet that I don't have seeds on, but if you have seeds, you will be able to see different distribution. You can see what you've earned. You can see your ranking, etc. So we did to our early users, they can stake and they can earn seeds. And then when the TGE happens on the 3rd of June, so that's next week, Tuesday already, we have our TGE coming up. Then there's an airdrop that will happen to people that have been users to the protocol. And how we're actually going to distribute the airdrop is that you get an airdrop. You can, if you want, directly dump it if you choose to do so, or you can stake and earn. So all the revenue that's been generated in the past, it's not the highest because we didn't activate all the fee switches. We'll be doing the buyback and distribute model. So then if you stake, you get part of that inflation basically, and that revenue. So our goal is to stake and earn model. So that's what we've done in the past. For the new users that still want to participate, I would say, get into the YNEFX ETH LP pools that, they're going to get quite a nice juicy YND reward soon, or just get into YNEFX or YNBNBX or any of the strategies. And it's not too late for snapshots that could be taken at some point. So you can still earn some seats before the TGE happens.
Cool. Yes. So to the 300 plus people, 400 plus almost people watching right now, you heard it here first. It's here's your chance to participate. And if you've got some ETH or BNB lying around, you're not doing anything with it, maybe it's your chance to try and explore something here with Yield Nest.
Yeah. Fantastic. Yeah, and I would love to hear from you as well. What are you most excited about in DeFi, actually? We talked a lot about Yield Nest, but what is your view and what are you looking forward to?
I think I personally really like derivatives in general. I think derivatives are really interesting. With IVX, we're building option protocols or option products anyway. So I think derivatives are always something that I was always interested in. I think there's a couple of sectors of crypto or DeFi, I should say, that haven't really truly been explored yet. I think one of them is general Forex on chain. I'm British, so I live in England and I use pounds every single day. But on chain, I don't necessarily have any way for me to express my savings or my, any assets that I want in pounds, for example. There isn't necessarily a pound stable coin. If I look at like the historical performance of the pound from January to where we are 6 months into 2025, the pound has outperformed the dollar by like 35%. So, I mean, it's not great. Now, of course, always, Forex is always going to be like this. Sometimes the pound outperforms the dollar. Sometimes the dollar outperforms the pound. But now in my head, or when my accountants have to sort my things out, I have to have this ongoing conversion, which is like an additional headache. And sometimes I think I would just like to have a pound stablecoin, or if you're living in Europe, maybe you want a euro stablecoin. Now there is a euro stablecoin. I think Circle have one. So there's USDC and there's a euro C, and I think Angle also, who are part of the Curve ecosystem to some extent, or were last cycle, have a Angle euro as well. But there isn't necessarily anything for the pound. So maybe this is something I need to build myself. If anyone's watching and wants to build this with me, hit me up. But this is like one area of crypto or DeFi, I think overall, that just hasn't really grown as much as I would have thought. And the second thing is like perhaps some of these alternative financial instruments, maybe things like Sharia compliant instruments as well. There's a vast amount of money in the Middle East that perhaps want to get involved with earning yield, and maybe there is something for those kind of people as well. I know that Pendle recently announced that they're going to kind of start building in this direction as well as some of the other big DeFi protocols. I think a Solve Bitcoin also have decided to go in this industry or tackle this sector. And there's billions and billions of dollars available there. But I think this is like another sector of crypto that I think is pretty interesting, or of DeFi that I think is pretty interesting, kind of untapped. And then I think it's all about, for me, I can't wait for when we have equities on chain. When it's very, very easy for me to buy a tokenized Microsoft, or a tokenized Nvidia, a tokenized Tesla, a tokenized SPX, or tokenized FTSE 100 for those in the UK, or wherever you are in the world. I think those kind of equities on chain, I don't know how long it's going to take, and I do understand and appreciate that there's lots of complexities with regulation and KYC and all of this other stuff as well. But I do still think that there is something interesting that we could do with DeFi, where I can borrow some stable coins against my S&P 500 position or something like that, which it's hard to do. It's very hard, but I do think in future there can be a world where this is, maybe it has to be fully KYC, and maybe it has to be completely regulated. But I don't know. I think those are three sectors of crypto or of DeFi that I would like to see something more of.
I'm notoriously against the KYC or AML like requirements, but I do also understand the issues, right? So, but I think I will just like, sorry. No, I'm against the, sorry. Oh, thank you. There you go. No, I'm against, sorry, I had something in my throat, but I'm against KYC AML. I was like almost choking about it, because I do think that DeFi it's very important for us actually to keep true to that ethos, like peer-to-peer finance. We create a parallel financial world. But yes, we want to trade equities. Yes, we need to get more real assets on chain. We need to get rid of the circle jerk we're in DeFi, with like just pushing points around or things. Like, how do we do that? Yeah, tokenized equities or tokenized credits, that what we talked about. I like that. But
I mean, would you use it? That's my question to you. Would you use it?
No,
you wouldn't.
KYC AML, I wouldn't.
No. What if there was no KYC? What if you just had the opportunity to go on Uniswap right now or CowSwap, and you could swap your USDC, you could swap your yield directly into maybe some Apple shares, or maybe an indice of some sort?
Yes, yeah, I think I would use it. Yeah, if I can get an index, and the challenge there is, in my opinion, that the traditional financial world is kind of broken, right? Because like, how do I know that they're real shares and things like that? So I do think I would use it, but I do want to have it verified. I do want to have verified shares. I want to have verified Tesla shares, or verified Amazon shares, or and then you can do that with proof systems. So so from SPX 6,900 to Dow Jones, something like that. But then provenable on chain, that we can actually use it, and then 100,000%, I would definitely be interested, especially because of the looping and the other cool strategies we can do, and the arbitrage in between, and also the forex markets. Obviously, is something I'm super excited about as well. I think it's interesting, but there's something, fiat is a content type, like pounds or euros or dollars. And I think, but having a basket of forex, that would be interesting. and then having a credit card that automatically stores, saves for you. Very cool. Yeah.
Yeah, again, it's just something that I have a problem with in, myself, having, a US dominated stablecoin market, which is fine. I think everyone appreciates and everyone knows the US dollar is king, right? And probably will always be king of all of fiat currencies for the, I don't know for how long, but for now it is anyway. But like,
Yeah.
for me as a user, let's say if I want to, we're seeing all of these, EtherFi with this credit card, and we're seeing a lot of these other protocols build out these like
I like
payment
that.
rails. Again, like I would need like something in my local currency if I actually want to really avoid a lot of the other issues that comes with FX fees, or with capital gains having to pay, or maybe even losing dollar value if the dollar goes down against your currency as well.
Yeah, well, I think taxation is theft, but I'm not against the necessary taxation anyway. But I do think as humans we should have had just productive assets.
Yeah.
And the unit of account could be dollar or pound. But I kind of want to have my wallet, and then I use like also a crypto credit card, and then just have a saving account, like have a liquidity pool or something, or a lending position that then borrow against it and use it. And actually, to be fair enough, like EtherFi is actually killing it right there. I would say the direction they're going there is actually, a lot of respect how they do that. But they're moving away more from DeFi, more into like a neobank territory,
Yeah.
which is fine. And I hope one day maybe they will use YieldNest products in their stack. We're already talking to Swissborg. Swissborg has a card and everything, and they have productive assets you can save, and you can then click it, and then you use it in the real world, right, with your card. So that would be very bullish.
Yeah. I again, these are just some of the sectors that I think are maybe a little bit underexplored, and maybe there's scope, for some builders to come and really create some innovative stuff around this sort of stuff. Otherwise, I like derivatives in general. So any sort of derivatives. I love options. I love binaries. I love this sort of stuff as well. I love anything to do with derivatives. So I think even LSTs and LRTs come under this umbrella as well. So yeah, I think more of that sort of stuff. Yield bearing assets in general, I'm a big fan of. So making, figuring out all of the different sources of yield that we have in crypto, whether it comes from blockchain inflation through security, whether it comes from trading fees for LPs, whether it comes from funding rates on perpetuals or option yield from selling. We have a few yield sources already, or of course lending and borrowing fees as well. Like using them in different ways to kind of create these yield bearing assets is, for me, a really, really interesting part of DeFi, and something that I really enjoy.
Yeah, definitely. We had a research article with Sohol Research, productive assets. Let me see if I can link it quickly. Productive assets. Let me see. I will link it after the chat. I'm just looking for it now.
Yeah.
Yeah. Oh, unlocking capital efficient and beyond. And we went all the way back into the old Roman times, into like how gold is basically not a productive asset, store value. Bitcoin is not really a productive asset, but I do think ETH is a productive asset, or other DeFi elements are productive assets. And it's kind of the first time in history that we can make productive asset that we can send to each other, right? It's kind of funny, like, why do I get, if you get paid, and it's very normal for us to get paid in pounds or dollars or euros, and then these dollars come to your account and just sit, right? It's very inefficient, actually.
Yeah.
It would be much better to directly just get paid into your savings account and then draw down, right?
Yeah. That is interesting. Why don't we do that?
I don't know. Well, there's a reason for that, because if everybody would do that, then the whole financial system would
Yeah,
collapse.
of course.
Yeah.
We need to keep that. We need to keep that monetary premium in place, I guess.
Yeah.
But
I'll post it below our live stream.
Oh yeah, sure. I guess those are the kind of things that are interesting to me at the moment, or interesting, like something that I would love to see more of. I think overall, I think DeFi has matured a lot over the years. It's nothing like what it was in 2021, which was only 4 years ago. actually gone quite a tremendous way. Even though if you look at like some metrics like DeFi TVL, it hasn't really changed that much from the peak of last cycle. The instruments that we're using, the sophistication, the security, the types of instruments that we have, the variety of protocols, I think has grown massively. So yeah, I'm very, very, very bullish on the future of DeFi.
Me too. But yeah, I'm also very bullish on the future of DeFi, and I think we need to go back to innovation, building new things, right? Like just forking something, having a different skin, or another L2 or something. I think we got a bit too distracted with the big money signs of L2s or new forks. We could easily have forked another protocol, but we choose to build from the ground up. Also with YieldNet, and I think we should recognize that as like things that are actually new and innovative. And what I always try to do, it's a bit hard because we've been in crypto for a long time, but I see a lot of things, and I just see, for example, I'm not going to name names, but I see things happening and like, oh, I saw that before like 3 years ago, right? So we should do new things. And but also the counter side of that is a lot of things that we saw in 2017 or 18 and 2020, a lot of these things were actually good ideas, but they were just too early, right? So
if you had to name like a couple of ideas of like new innovations or something that you've thought of that maybe you don't have the time to build yourself, but maybe there's an interesting idea there, what are some of those innovations that you'd like to see?
Mortgages on chain, like
okay.
on-chain credit scoring.
Okay.
And that we can then say as a collective, for example, oh, I see Mowgli is a streamer, has a reputation, has a certain on-chain balance, and you want to buy a house. Well, we're gonna, as a collective, people can then maybe borrow some money to you or something like that, right? I would like to see these kind of new plays happen, and I think also what I would love to see more is more people that are daring enough to build yield generating protocols on chain. I think the time now, because in the past we were all scared of saying that word, yield generating, because of the regulations. But I think we should just go back and build sensible DeFi protocols instead of just like shooting up meme coins and hope that we pump.
Yeah, this kind of credit line infrastructure is really interesting. I've seen a few protocols, Wildcat, and I think another one called 3Jane, which is like really pioneering this right now, which has been pretty interesting to see. I think we'll just see more and more of it over time. But yeah, I know that 3Jane is like definitely like working in this specific sector. So I know Dio, you'll like that one for sure.
Nice, I'll check it out. 3J and DeFi, yeah, amazing. Yeah, that and it's also, I would say, in the past we would have been like, we could have known all DeFi protocols, but there's so much happening right now. It's great. I'm very bullish as well.
Yeah, that's a good thing that we can't keep up anymore. Like it just shows like the pace of innovation and the fact that it shows that the space is getting bigger and bigger. So yeah, I like.
Yeah, I know 3Jane. I actually know 3Jane. Yeah. I actually know that one, but I didn't have time to look into it. Quite busy now. But I think it was built by a pretty famous builder.
Yeah, it's built by the I think it's the Ribbon Finance guys.
Yeah, great.
Ribbon Finance, I believe. Yeah.
It's funny because that Ribbon Finance is not really around anymore, is it?
They rebranded into Avo.
Okay.
Yeah. So, but yeah, that was a protocol last cycle, massive, hugely popular. Again, they were innovating in options and derivatives, and yeah, I guess they're still doing that derivative stuff now. But it's nice to just see like new stuff coming out from these guys who have a lot of experience. So something like 3Jane, yeah, it looks interesting. I haven't tried it myself yet, but I think you can get like real world loans based on your on-chain credit score. I haven't tried it. I don't know if it's only US based at the moment or what. But
yeah, and I want to also definitely give a shout out to if we're talking about DeFi to resupply or Curve in general, where the culture there is just to build and deploy immutable code bases, right?
Yeah.
And I think it's really important for our industry. And also from a YieldNet side, our balls are not that big, right, to do that. It's like quite intense to do so. But Resupply just launched, and they basically build a lending market around Curve and Frax in a very cool manner, right? And no sexes, just DEX launch. I like that style. Although YieldNet is going a little bit also to the centralized exchange route, because also of our nature with derivatives, and we need that kind of more spiel to it. But we will integrate these core Cyberpunk DeFi protocols like Resupply or others into our stack. Yeah.
Amazing. I think maybe we can kind of wrap things up shortly. We're just an hour and 10 minutes in. I think it's been great. I think I could sit here and talk to you for hours and hours, Dio. But maybe we can do it again sometime.
Wow, it's been an hour 10 minutes already. It's crazy. I thought it was
it's gone quick. I've enjoyed this conversation. I think it's been great for some of the people watching to like really understand like what you've been building over the last few years now. And yeah, like it's a really interesting opportunity. I'm super excited to see some of those Bitcoin strategies, some of the ETH strategies that you have right now, and kind of how you expand into all those other sectors as well. AI agents being involved, stable coins as well. YieldNest really is the yield protocol, right?
Yes. That's cool. I'm wearing the swag here.
I like it.
Protocol. Yeah. We're seeing all the yields. We're combining it for you, and you can just sleep at night and have your asset be productive. So you can do more productive things in your life and let your assets work for you.
I like it. Well, Dio, any last comments to the people watching?
Yeah, please follow YieldNest on Twitter, YieldNest Finance, and go to our website, yieldnest.finance. Follow us, use the protocol, give feedback, get involved in the governance. We're very eager to work with other DeFi builders, and very pumped for our governance rollout. It's going to be pretty cool. We have a lot of things that we didn't release yet, so big tease. There's a lot of things coming down the pipe.
Okay. Okay, good. Yeah, well, it's been a pleasure. Thank you as always, Dio. We'll catch up again soon, and to everyone watching, see you all later, guys.